Who are you blaming this
Who am I blaming? You want me to find out who's blaming? Look, I think in terms of the pricing, it's always an alchemy, right? It's more of an art than a science. But the last round, the last private round they were raising it at like $48 a share. So that already set sort of the bar for what it was supposed to be. And I think that's, you could blame that, right? You could blame the last round of investing.
So the question I have is, do private investors, and I asked Mr. Wonderful this as well, do private investors somehow know something more or less than the public market?
So let's just consider two things on this particular deal. And we might as well go back to Lyft. You remember back in the late 90s, I'll use one example, Toys.com. I was an investor in Toys.com. I went to zero, never made any money. And I grew a little 4-inch Charlie Munger on my shoulder when that happened. And he appears, you can't see him, but he's on my shoulder every time I'm getting pitched a deal like Lyft or Uber. And Charlie says only one thing. If it has no cash flow, just say no. And I have listened to my little Charlie ever since the late 90s, and I've been right 100% of the time. This company is valueless. It doesn't have any cash flow. It's a speculation. It's no different than putting your money down on red or black in Vegas than giving money to one of these losers.
Or like the way I like to think about it is like setting up a storefront and, selling dimes for a nickel. Might as well be doing that at this point, right? So
actually, you think about this, it's really one of the largest transfers of wealth. Maybe it should be Elizabeth Warren should be the CEO, because every time you get in an Uber,
they're subsidizing our rides.
Exactly, by about 30%. I use it all the time, and Lyft the same way, going up and down Collins Avenue.
So it's the investors that are subsidizing these, right? SoftBank, right. And now it's on the public market. Anyone buying into Uber stock, they're the ones subsidizing these Uber rides, which I take on occasion.
So
I know.
You don't think there's anything they could have done? I mean, one of the questions is, had they come in with a lower price, the flip side is they wouldn't have raised as much money for the company, and boy, does the company need as much runway and cash as possible, given the losses that they have. But had they come in, let's say they decided, okay, we're not going to do $44 or $45, we're going to go at 40.
I mean, I think...
By the way, psychologically, that might have actually made it even worse, right? Because people might have said, oh, my goodness,
they don't have any confidence in this company, so they're actually pricing it that low. Here.
Well, I think all of that really depends on the initial range that you set, right? When Pinterest came out, we had maybe one day of discussions about how that was coming in at a lower valuation than its latest private round, and then everybody felt like, oh, you know what, this is a good deal. And guess what? Pinterest is up, I think, about 25%
How much lower was
its
it
IPO
than
price.
Its private round? Because
it was about $3 billion lower.
Okay.
So, a significant discount, whereas, I think a lot of people are looking at these two side by side as various case studies. But to Andrew's point about whether the private investors were smarter or less intelligent than the public investors, a lot of people have been talking about these special SPVs that were created 3 years ago for high net worth clients of Morgan Stanley and Bank of America actually had the same one.
Which were used to attract, effectively, Uber to do the IPO with them.
So I was able to take a look at those documents at the time that were being marketed to the high net worth individuals. They had zero disclosures. Zero. Basically, there was kind of boilerplate language in there that said, trust your fiduciary and Morgan Stanley and Bank of America to vet these things at whatever valuation they were being sold at, which at the time I think was about $67 billion. Trust us, kind of give us your money blindly, and, you should see decent returns.
It's interesting. There was a lot more appetite for Uber in the pre-IPO phase than in the post. And there were a lot of institutional investors already bought into the private market around Uber, so that sort of sapped interest in the public market.
Who else was left to buy if you had the Fidelities
People
of the
who
world
might have
already in,
propped it up to sort of, I already own a piece of this. I don't even
So
own it
can
anymore.
we say it's worth at least the money they've burned building this ubiquitous platform globally in the case of Uber and the domestic platform in the case of Lyft? So that would get you a price of about $20 a share. You burn through, because I'm going to assume they're going to burn the $8 billion they just raised. So the floor is probably $20 billion. In terms of,
So if $20 billion
so we're a third of what it is now, is what you're saying.
But this is really a situation where these two have to merge, because it's going to be like an XM Sirius satellite deal.
Can I say something? Even if they merge, and then Waymo shows up 3 or 4 years from now and says, we're doing an autonomous fleet, and by the way, we have
or Tesla comes out with
Google Maps, so we know where everybody is to begin with, and we're just going to rebuild the network.
So you go back to your little Charlie Munger and you listen to what Charlie said. He would have never bought this thing, and he's right, ever, until it has cash flow. Then you could put a multiple on it. When is that? Maybe never.
What is the best argument you have heard on the bull side as to what Uber owns?
In terms of
what its moat is.
I think in terms of, and they came out there during the roadshow and said that they were going to be the next kind of Amazon character where they'll own this whole transportation network system. To me, based on conversations with investors and people close to the company, it sounds like the network itself is the best moat. Just if you're able to kind of get these externalities of having, large liquidity of drivers on the system, and that in turn can bring more riders to the system because people don't like to wait a long time for their car, can serve as a moat. That said, that doesn't mean that there can't be another player in there too.
They called it a $1 trillion market. It's actually only $11 billion, the taxi business in the U.S. Maybe add another $4 billion to the livery service. So it's not that big. And I think it was a little disingenuous to talk about trillions of dollars in transportation.
20 trillion. Total transportation market is like 20
trillion. But that's my whole point. It's like saying, FedEx was something really special when it came out, because it was. But now it just trades as a logistics cash flow company.
So my question, we talked about it yesterday, and you tweeted out about it, I saw. You can
Talk about in the office. I tweeted it.
You can look smarter than SoftBank today by buying
it now, right? Because you get it at a cheaper price than they paid.
My question is, what do we think is going to happen to future IPOs? I'm thinking of WeWork, which is clearly a common, and there's a number of other, by the way, SoftBank led and backed companies. Part of me wonders whether all these SoftBank cash infusions actually propped and pushed up the value of these companies artificially? I
think that's a good question, and it also created behavior where you were kind of used to having this, not free money, but very cheap money that you were able to use to help kind of grow your business. In bankers that I speak with, on background, they do say that if you're a WeWork and you have a business model that is just kind of burning through cash, investors are going to take a harder look at that, and you may have to react to that, whether it's in pricing or timing of your deal.